What's up, Swing Trader? Snacks here. We're going to jump in and do our watch list for Monday, November 17th. And this is going to be one that maybe a lot of you don't want to hear, but at the end of the day, I do not believe we are currently trading with edge. If you are trading, if you are continuing through this chop to put on positions, you are not trading with edge. It's becoming more and more apparent and obvious. We are not in a follow-through environment. And for myself, I trade continuation patterns in the leaders. Well, we are not in an environment currently that is following through continuation. There is no continuation, right? We're up, we're down, we're gap up, we're gap down, we're sideways. All right, we are going sideways. We're getting fake outs and head shakes both ways. We are not trading with edge. So pump the brakes. All right, we have to wait. There is a few zones that I have here on the SPY. I'm going to just keep this quick, guys. I'm not taking a trade before Thursday this week. Might not be what you want to hear, but it is what it is, right? I have realized that we are not trading with edge, and I refuse to continue to get chopped. I wouldn't say that I'm getting chopped, but I'm placing trades. It's meaningless to be taking these trades. You know, I had a great gold trade last week. Like, that was significant. That was nice to have gotten. But, you know, with the market, look at this crap, man. We come down, we rip up, we come right back down, we push up on Friday. What are we doing here? All right, why are we forcing things? So I've got these zones mapped out here, and I'll walk you through what my thinking is for this, but I've also got this black zone right here, all right, and I've got that there because it is a blackout zone for me until Thursday, until we see the reaction to the NVDA earnings report, okay? If there is a bubble, I don't care about any of that. But what I do believe is that NVIDIA will move the markets, okay? It, along with semiconductors, the reaction to the NVIDIA earnings, if it is negative, I think it's the catalyst that finally breaks us down. Not, you know, a few days down. I mean, actually breaks us down and moves us lower into year end. And if we get a good reaction, then I think it will be the catalyst that the market needed to trust the AI trade even just a little bit longer into year end. And I think maybe we see some institutional chasing into year end, as we know that only 22% of money managers are outperforming the market this year, which is not great. It's the worst year on record, I do believe it is, for money managers. So listen, if you're outperforming the market this year, you need to be happy with that. All right, you should. A lot of stuff out there makes people think they can get rich in a week with trading and all of these things. It's noise, it's nonsense. You need to have a process that you can repeat over time. You need to have models that show you by executing these things, you can outperform the market. I've got 6 of them, 5 of which are continuation patterns on the leaders. Brings me back to why we are not going to trade until we break out of one of these zones and also are through that NVIDIA learning. We're not in a continuation market. We're not in a follow-through environment. So my continuation patterns, while I'm not getting hurt because I've sized down and I'm still taking winners, I had a great gold trade. It's just I don't have the edge. So I have this new way of measuring, you know, should I be in the markets, or if I'm taking losers or not seeing the equity curve gains, whatever it may be. If I feel things are a little bit off, right? It's a triple M. Is it me? Is it the model? Or is it the market? Okay, me meaning, am I executing my model, right? When it triggers, am I hitting buy, sell, whatever it may be? Am I executing without hesitation? Am I being mechanical? Okay, that's me. That's what I have to do. Am I managing my risk properly? Me, is that covered? Yes, I'm doing just fine with all of that. Is it the right model to be trading? Yes, normally we are in a trend in markets, right? It's a matter of using breadth to identify when to stop trading the model. But I am not about to change any of my models. They are all continuation patterns on the leaders, or the 6th model is a narrative play, a rounding bottom, narrative, idea, speculative, still within structure play. My models are just fine. Okay, they all still hit well over 50%, most over 70 and 80%. My triple R has been hitting at over 90% in the last 6 months. I've only taken a few losses and multiple wins. You know, the triple R is still the bread and butter. There's no need to be switching the models or even considering that. And I don't believe I ever will. I've seen enough historical data that when the market is in a trend, higher highs, higher lows, lower highs, lower lows, when we were in a confirmed trend with follow through, these are the models you want to be trading. There's no doubt there. And the last one is market, right? So we've got, is it me? Is it the model? Is it the market? And that is where we are right now. We are in a market that is suggesting, if you can have the discipline to recognize it, the skill set to read the breadth. Let's take a look at that again right here. I mean, guys, come on. It just can't go anywhere. It just can't go anywhere, right? We are chopping. This is nasty. We keep getting ourselves below the zero line on the high-low index. We keep getting below the midpoint on stocks above or below their 50-day moving average. We have a bearish divergence in market breadth even as we were pushing up. These things were happening, or even as we have been continuing to push up. A lot of stocks are getting below their 50. Guys, we don't want to see things like that. And so that is the third M, where it has forced me to make these zones here, and I will show you the pathing that I will take after the NVDA report. What I would like to see is an invalidation of this lower high. Right now, this looks nasty to me. I think this looks slightly more bearish than bullish, though we've not fully confirmed because we didn't quite make a lower low here. On Friday, we got bought up on Friday. Before I forget, let's look at the internals. This was not very convincing of a buy-up day. Typically on the dip days where everything gets bought, these indicators are far stronger to the upside. This is not a very convincing cumulative tick, not very convincing in the up-down volume, and the AD did not even close above the zero line. So I know that on the chart, the daily candle looked pretty bullish, but under the hood, that wasn't very convincing buying for me on Friday. So what I want to see is us breach and invalidate this high. Okay, and so that would look something like this. And then what do we do from there? Maybe a pullback and then a move up off of that. At that point, our 9 would probably be somewhere there. We could buy that, okay? Be in the upper end of the yellow zone or starting to get into green. I could get in line with buying a move like that, and it's the exact same thing to the downside. If we breach these lows, okay, if we make a new lower low, all right, and then it pops up a little bit and then it rolls again, we want to short that move. All right, so somewhere in that zone or in this zone is what I'm looking for beyond NVIDIA's earnings, okay? And if that looks like squiggly lines to you, I do apologize, but it's just how I've chosen to visualize this. I want to invalidate the lower high, or I want to validate a lower low this week, and after NVIDIA's earnings, the first triple R that we get on the indice for that, then we'll roll into our focus list of leaders. In the meantime, I am continuing to build out my India trade thesis as we continue to push up towards top of range in this box breakout on the Indian market. If you did not catch that in my last video, this is something I am growing to be very interested in. I have requested trade permission from my broker. I am building a watch list of the leaders in the Indian market. I will share that in the link below. I suggest you begin tracking these things. And guys, if the Indian market breaks out, pulls back, retests, holds that, and pushes higher, we want to buy that move right there. Absolutely. So I would suggest being ready for that. I might put out a write-up on what I have found from, analysts, economists on the outlook for India, but it does look like they are on track for sustained GDP or for growth of 6 to 7%. For the foreseeable future is what they are currently projecting. And that is significant, right? China's growing at 3. America, gosh, man, we're not even putting out data, so I don't really know what to trust, but, they say 3 to 4 in America. So, you're talking double, right? You're talking double out of the Indian market, and you're talking about a big sideways consolidation zone really loading up. The move breaking out of this will likely be very strong, and I want to be ready to trade it. So, look, guys, I don't like the way the U.S. market looks currently, and I do not like the idea of loading anything before NVIDIA's earnings. I think that earnings release is going to move the markets, so I suggest waiting. Nasty bear market for crypto. Well, it's at that level where it could do so. If it breaks this level, pulls back and fails, that's a freaking short at the end of the day. And I know a lot of people don't want to hear that, but that's what it is. All right. It is. And if we react off of this, then nice, but we would need to get back over our 50 and our major moving averages. And you could maybe buy that move there, Don't know, but I would surely like to see our risk on assets catch a bid off of this long-term trend line. Again, guys, if we break it and do something like that, trouble. And that's a short. All right, so look, guys, we're not going to force anything. All right, Bootcamp, we've got a session on Wednesday. I put it in chat. We're going to talk about why are we trading. For anybody who is feeling jumpy right now, I'm going to help you explore some of the trader psych behind sitting on your hands and being sure that you're doing the evaluations necessary to know that you're trading within your edge. Okay, forcing it, pressing buttons, that's not how this works, all right? And that's how you get chopped up and really get into a drawdown that's tough to recover from, or even worse, you fuck up months of work, guys, and I don't want to see that for anyone. So the title is Why Are We Trading? We'll talk about that on Wednesday. I look forward to seeing you all there. That's it, guys. We're gonna pump the brakes and wait until we get into one of these green zones with the catalyst of the largest market cap in the world, reporting at what could be the top or just the next breath of an AI bubble. We're certainly going to want to be ready to take plays end of week or early next week. But until then, we wait. Please do realize if you're forcing trades now, you are not applying an edge. You're gambling. You're giving in to impulse. You're not trading with edge. So pump the brakes. Wait until we get some additional clarity. Stay safe. Manage your risk. I'll see you soon.